right, what's up, Crypto Paradise fam? It's another day in paradise. I'm Ian. This is Nick. We are back with another video. We've been talking a lot about 100x gem, moonshots, those sort of opportunities, which we all love. But let's be honest, you also need something in your portfolio that's a little bit more stable, a little bit more consistent, a little bit less risk. And so today we want to talk about passive income plays. There's a lot of different passive income opportunities within the crypto space. We're going to cover a couple different types, whether that's staking, whether that's bot trading, whether that's something more sophisticated like sniper bots and other types. So with that, Nick, just generally, let me get your take on where passive income plays fall in your portfolio, noting nothing is investment advice. We're just talking about our own personal experience. What, in your personal experience, where does that fit within your portfolio?
Yeah, I mean, been really big on passive income the past 2 or 3 years, and the reason being is it's a bear market. So if you're in these assets, you know, at least getting in some assets that provide that passive income to kind of weather this bear market storm. Also, you know, if you like a large cap and you don't want to get out of the market because you don't know where the floor is, it was a great opportunity just to hold the asset, but also earn while you're doing it. I would say passive income is a big chunk, probably 25 to 50%. And the reason it's 25 to 50% is not all of these are, you know, passive income only projects, but now you can stake Ethereum. You can get yield on your BNB. You can get yield on your Atom and your Cosmos. So these large caps are allowing you to earn back yield, even though some of them are only 3, 4, 5%. It's still considered passive income because you're generating new tokens just by being a holder and a staker. So I think it should be in everybody's portfolio. And I think a lot of new projects have the opportunity to do staking. And most people don't really realize that. They buy into something looking for that 10x, that 5x, 100x, but they don't really understand or dig deeper in the project to understand they can stake, or they can delegate to a validator, or they can set up a node where they can enhance their yield even further.
Yeah, that's a great point in that you can kind of have best of both worlds, so to speak, to some degree. Like if you are still looking for, you know, those big wins, but you also want to get some passive income, staking is a wonderful opportunity. A lot of projects offer it. I want to talk a little bit about some of the more, you know, bigger caps, the blue chips, so to speak. I'm staking Ethereum through there's a number of different providers. Lido's a big one. There's a lot of different these providers. You can either stake all like 32 ETH, which you want to do like that's I guess the official way to do it, or you can do one of these providers where you can stake less, but you make about 3 to 4% on that, paid out in ETH, right? Claimable anytime. It's all these tools for the most part are decentralized. Obviously, some centralized exchanges have these options as well. So that's a cool option if you're just in ETH. You know, you can make 4% on top of that, and you're getting paid out in ETH. That's presumably going to appreciate over the course of this bull run as well. So that's a nice option. There's a lot of big caps that offer even juicier staking rewards. Cosmos ecosystem, I believe, you know, you just did a little research. What is it, 14, 15%?
Yeah,
right
14 to 16% is kind of the average for the Cosmos ecosystem for the large cap. So Atom or Cosmos, if you do it yourself, I use the Kepler wallet. It's kind of like a MetaMask wallet, and you're earning about 14.4%. Also, Juno is another large cap in their ecosystem, pays about 16%. And then Osmo, OSMO, pays about 14%. That is kind of their DEX token. So if you're familiar with Uniswap and their Uni token, or PancakeSwap and the Cake token, Osmo is the Osmosis token for the DEX on Cosmos. But yeah, starting with the large caps, and we'll get more degenerate. For the beginner who's listening to this and already feeling lost, you can do a lot of this. Presumably, you're probably on Coinbase or Binance if you're a beginner, right? You can do a lot of this on Coinbase and Binance. They have Coinbase Earn or Binance Earn. Click on that tab, and you'll see the list of everything that pays out passive income. Understand, since you are using the centralized exchange, you're going to receive a smaller percentage. You know, Coinbase might only be offering 2 to 3% for ETH, versus Ian's doing it the decentralized, more high-level route, and he's earning 4 to 5%. So they do skim some off the top. These are businesses, they got to make profits, but even the beginner can start to stake a large list of assets and start earning some passive income.
Yeah, nice. I remember many years ago I was staking Tezos. I've staked Polkadot in the past. So you can do it even through some of these wallets. You can do it, right? It's decentralized wallets. You can do it through many different options for staking the big caps. But as we sort of go into the lower caps, there are also many staking options. We personally are always looking for low caps that offer staking for the most part, right? But I want to differentiate between inflationary staking and deflation or non-inflationary staking. Inflationary staking means that the tokens that you're getting paid out in are coming from that project's treasury. They weren't already in the circulating supply, they're coming into the supply and making that supply greater. As time goes on, that normally has an adverse impact on the price of the asset, higher supply, lower price sort of thing. Conversely, you also can find, they're harder to find, but you can find non-inflationary. Maybe the project is generating revenue and paying stakers back in ETH. Maybe they're generating revenue and paying stakers back in the native token that had been bought back off the market and then being returned to the staker. So what are some that fit into those categories that we can highlight as examples?
Well, I mean, if you look on the smaller cap side, the easiest ones that come to mind are the pre-sales that we've been in lately. So that would be Dead Prez, Yak DAO, ArcX is about to have it, where what they're doing is they had a sell tax. So that sell tax built up a lot of tokens, and now they're opening staking pools and rewarding the people who believe in them, who are holding the token with those assets. So essentially, those tokens are coming from weak hands and going to strong hands. They're not coming out of treasury onto the open market, which is diluting the share value, like Ian mentioned. Another one would be even Gora, which we'll talk about. Gora is a little different because you got to delegate to a validator and you earn 17% APR. Ferrum Network is a validator, so you have a trusted validator there. Go delegate to Ferrum Network. But essentially what they're doing is, as clients are using their Oracle provider, they're using a percentage of that revenue to buy back the Gora token, and then they're fueling those staking rewards with the Gora token that's been bought back off the open market. Therefore, there's no inflation to the circulating supply. As long as they have clients, and if their clients grow, they'll never have to tap into all those unused tokens and put them in circulation, which drastically helps price performance for the holders of the token itself.
Yeah, those are two great examples, and a few other I want to just shout out real quick. There's two that we just had brought on the show recently, Yak DAO and ArcX, sort of similar to the ones you just mentioned in the sense that these are revenue generating businesses, either now or they will be in the future. And the plan is to take a portion of that revenue, buy back the token off the open market, and then return it to token stakers. So that's in the case of ArcX, which is an AI luxury, sort of AI luxury project, and Yak DAO, which is in the RWA sort of real world asset real estate sector. So those are two that are coming with I'd say non-inflationary staking, right? Sustainable staking, I think, is maybe a good way to put it. So those are a few others that are out there.
And I want to touch on that a little longer too. Like we said, we're looking for the sustainable staking because Ian mentioned it. A lot of these projects that are offering staking rewards, all they're doing is dumping and dumping and dumping more tokens into the supply. And as people sell off that passive income, there's not enough new buyers to offset that, and it's really going to crush the price chart over time. We saw this in the play to earn economy last cycle. So a lot of these video game producers made games, and you play the game to earn the token. Well, inevitably what happened? Everybody was hyped about the game, price exploded, but then everybody's just earning these tokens for playing every day and dumping them on the open market to pay bills, and now the projects are dead, and they don't exist anymore, and they only lived one cycle. So that's what you really want to avoid. You're going to get caught with the bag in that case. And it's kind of a self-fulfilling prophecy because people understand this, so they're just selling the rewards, and then everybody else is selling because they see everybody else selling, and it's just a downward spiral that you don't want to be a part of.
Yeah, one tip for anyone who's interested in any of these types of passive income plays, staking projects in particular, pop into their Telegram or Discord and straight up ask, hey, where are these staking rewards coming from? And they'll usually answer, hey, they're coming from the treasury. No, they're coming from, we generate revenue this way, and you're getting paid out in ETH every month. That's something that if you hear that, it's like, oh, that should pique your interest, because that's also pretty rare to find that. And if you do, it's pretty special. So very important to differentiate. Ask the questions, do your due diligence, dig in, ask the tough questions. You'll be better off for it. I want to talk about two other kinds. We talked about staking. I want to talk about a couple other kinds of means of generating passive income. Another kind that I've utilized in the past, and you could call it I suppose it is passive actually. So it's trading, but using buy and sell bots basically connected to your exchange account. How this works is you sign up for your centralized exchange, you can connect it to these types of software that exist out there, and they'll do automatic trades for you, right? Market's high, they'll be selling, they'll buy back low, they'll do this over time, and they'll generate a little bit of yield for you over time. Now, again, you're not going to do 100x through this yield. This is, maybe you do 5-10% APY with these kinds of trading bots, but it's relatively low risk. You can set the parameters as you see fit, and there's a lot of different tools out there. 3 commas is a popular one. Coinly, I think, is another. There's a few others out there that are pretty solid, and it's trading, right? It's like you don't want to figure out trading. Maybe you're too emotional. Maybe you don't have time to figure it out. You can use a bot like this and just generate a little bit of income that way. So that's another example of passive income. I don't know, Nick, you ever used one of these bots before to do any kind of trades?
So I haven't used them on my personal accounts, but some of the accounts that Todd Butterfield manages uses 3 commas and whatnot, and some of them do split off a small percentage of the portfolio to do that. And like you said, as long as you're using a mainstream bot, relatively low risk, but you're not going to hit 100x gains. It's looking to just outperform the market a little bit. And like you said, if you can get 5, 10, 15% out of a bot like that, that is maybe Bitcoin that just would have been sitting idle anyways. That's a great opportunity and something unique to use. Like you said, some people are too emotional for trading, or they don't want to be in a trading group, or they're buying holders, but they're trying to figure out how do they make their money work for them. Because that's what we always say about your dollars in your bank. The dollars in your bank are making you $0. So you need to either get it in a CD or a stock or Bitcoin. So this is like, all right, I'm already in Web3, but how do I amplify the potential earnings of Bitcoin? Let's use one of these trading bots to try to trade some of the volatility that we see in the market on a daily basis.
Yeah, I've used these before, and I like them. I'm not using one now. One of the problems that I had set up on my bot was it was set up to generate more USDT over time. I wanted more crypto because this is like the height of the bear. This is like in the depths of the bear market, and I was like, wait, it keeps generating too much USDT, and I'm like, I just want more crypto. So I turned it off and just like I just think I restarted staking ETH or something like that. But anyway, they're great. They're great to use. I probably use it for my Bitcoin now I think about it. But in any event, there's another type of bot that's a little bit more sophisticated, a bit different. There's a couple different projects in this sector. So these are sniper bots, and what they do, how this works in terms of passive income is they end up returning a portion of the profits they generate back to the token stakers themselves, that particular token. There's 2 that I'm thinking about. One's called Banana Bot, and another newer one is called Aimbot. But how this works is, so when new projects launch on a decentralized exchange, you have this phenomenon called sniper bots, which use sophisticated tools to sort of buy first into this new token. So they're buying at the lowest possible price, and then price goes up, and then they sell when the price goes higher, right? That's what a sniper bot does. Now, most of these sniper bots are operated by individuals or companies who are only making money for themselves. But there are a couple of instances where teams, projects have built sniper bots, and they're kind of like Robinhood in a sense, where they're returning some of their profits back to the token, the stakers of that token. So the one that's quite big is called Banana Bot. I think it's sitting at close to 100 million market cap now. They do a lot of volume, they do a lot of snipes. There are many chains. They can return, you just hold the token, and then you can claim the Ethereum that's generated by the Banana Bot sniper. Pretty cool concept. And then there's another one which I just started doing research on. It's a newer one called Aimbot, set up a little bit differently, but it's the same sort of concept. And so far, based on my research, it's generating about 30% APY. And what I like is you hold their native token, which right now is at around a 3 million market cap. So there's a lot of upside there as it is. And every about 5 to 10 days, once the bot has generated enough money in their sort of community wallet, you can claim your portion of that wallet, of that ETH in that wallet, according to your holdings and also how long you've been holding their token for. So very cool concept. Higher risk, definitely. And the sniper bot phenomenon may not last forever. So it's sort of like, this is something that you want to monitor probably a little bit closer than like Ethereum staking, for example. It's on the higher risk spectrum of passive income. But aimbot's a really cool one. Definitely recommend people checking that out. Banana bot's another one. And Nick, I don't know if you got any chance to look into these, but
I started doing a little bit of research on aimbot, and it's interesting because you do have the upside potential of the token itself, but then you also have those ETH rewards on a weekly basis. So, most of us aren't sophisticated enough to run our own sniper bot, but understand that there's thousands of tokens launched a day, and there is an opportunity, if you have a good algorithm, to make some quick money on those launches, and that's what it looks like aimbot is doing. I don't know the exact percentages off the top of my head, but I think it's something like 25% of the profits go back to token stakers, and 40% of the money goes to back into the pool to make that investment pool bigger. So when they're sniping, they have more money to put into these snipes. So if they keep winning, the profits get bigger as well. And then the remaining funds, I'm not exactly sure where they're going. Only took a glance at it. I know Ian mentioned it. I saw a couple other people mentioning it. So it is on my due diligence. I got the tab open here, but definitely an interesting sector to look at. So I guess the next thing to go into, we talked about staking and master nodes and sniper bots. The biggest thing for a beginner to pull out of this is, why do we want to earn passive income and what are we doing with it? I think there's a couple things here. A, passive income on Ethereum or some of these large caps. Maybe it's a nice way to generate more of these crypto assets that you think have much higher upside potential without having to tap into your daily income that you need for your mortgage or your credit card bill, without having to put more fresh capital into the market. So it's a great way to slowly build that bag over time and something you believe in. Another option is you're generating passive income. You hold an asset, you're generating passive income. You can peel off that passive income and swap it either for fiat to pay real life bills or pay for a family vacation, or we're still early in this bull market, so I recommend using that passive income, sell it off, and put it into other opportunities, whether that's a new altcoin that we talk about here on Crypto Paradise, whether that's a new pre-sale opportunity that TDI is launching, or whatever it may be. Now you have, I call it dry powder. You have excess cash and capital that when an opportunity comes or a dip comes, you can deploy it and you have it available without taking it out of your bank account or without having to sell one of your core positions that you love for the long term. Those are kind of the two ways that I think of why passive income and how it really helps juice your portfolio over time. What about you, Ian?
Yeah, having that dry powder accessible without having to tap into your monthly income, I think, is key. As different opportunities pop up, you identify a gem, or pre-sale comes up, or you just want to invest more into BTC because you think it's undervalued and going to 180K, 200, 250K this cycle. Whatever the case may be, it's important to have that income coming in. The other thing that I think about, it's sort of a Warren Buffett inspired notion. It's compound interest, right? Which is not, Warren Buffett didn't make it up, but what that concept says that as you take the money that you're earning, and every year, say you're making 10%, and your principal is growing, you're reinvesting that, and then that's growing, and then you reinvest, and it just grows and grows and grows. And you can see there's calculators out there on the internet, the incredible nature of compound interest over time. It's got to be over a long period of time for this to really work. But if you read into Warren Buffett, he became a billionaire in his 60s because of this concept of compound interest. So if you think about 30% APY, annual percentage yield, your initial bag is, say, $20,000 or $30,000. You make 30% a year over the course of 20 years. I did a calculation the other day. It was like $7 million that you would have over like 20 years. Now, obviously, very hard to actually achieve 20 or 30% APY every year. In crypto, it can happen. In the traditional market, it's much harder. Maybe you do 10%, 8% on a great year. But over time, your principal keeps growing. You keep adding more and more because the interest, and that keeps growing and growing. You can have $8 million after 20 years of compounding interest and reinvesting that. So that's a very powerful concept that people understand. And it reminds you, you got to think long term
Right.
when it comes to investing in general.
Yeah, it's that delayed gratification. You know, the more pain you can live in, the better your results going to be when it comes to compound interest and passive income. Because the longer you can go without tapping into that money bag is just going to get bigger and bigger and compound on itself. That's why it's called compounding interest. So very interesting and a very important concept that I think people really need to grasp and understand. You know, you don't need to do 10 vacations this year. Do one and let the other 9 vacations sit in that bag and continue to compound. And I think that's why also in a bull market, this doesn't work in a bear market, but in a bull market, your APRs and your compounding interest is even more exponential because you're getting paid out in a lot of these in a token that also has upside potential. So I'll just use Gora for example because it's easy math and it's been doing well. So Gora was paying 17% APR, right? When it was at the bottom. For a couple months, it was sitting at 20 cents, paying 17% APR, but it's paying you out in Gora. Now the price is 60 cents and it 3x'd. Essentially, that 17% APR is now closer to 60% APR because it's 3x in value in terms of US dollars. So that's how it can really compound itself on in crypto terms because the APRs that they're showing you is based in that crypto asset. So if you get that APR and then the crypto asset appreciates in dollar terms, your APRs are much higher. And that's how people make it. And that's how, you know, you can really explode your bag quickly in the crypto bull market.
Yeah, Gora is a great example. Yeah, that's why we like to find these low caps with sustainable staking rewards, non-inflationary staking rewards. If you can find those, you know, with great teams, and you can check out our other videos about how to identify good projects and gems and so on. If they've checked off below the boxes and they have sustainable staking, it's a low cap as well. That, you know, that's something that we really like to see. So. Any other final thoughts on the topic of passive income?
No, I think we named some projects and we named those just because they're good examples and they're examples that a lot of people have access to. Like I said, most beginners, you guys will be on Coinbase or Binance. You have a dozen options of coins, some of which we mentioned to earn passive income and to get started. If you already have Bitcoin or Ethereum and it's just sitting on Coinbase, like a lot of my no-coiner friends that started putting some money in, I guarantee that's all they're doing. It's just sitting there. Put that capital to work. Click on one tab, click stake, and start earning that APR. A lot of these, you can unstake them at any time. Some of them, like on Cosmos and Atom, there's a 14-day window where if you click on stake, it takes 14 days to get your assets. But most of them, you can unstake at any time. So why not earn the 2, 3, 4, 5% APR? Yes, it won't make you rich overnight, but yes, it will start building that compounding interest and give you that generational wealth and assets that you already believe in. So take the couple minutes, figure it out, click on a couple links, and you'll be staking in no time.
That's awesome. Thank you so much for your time, Nick, as always. This is a great topic. We're going to do more on this topic as time goes by. But until then, we will see you on the beach. Peace.